TheoTrade, this is Don Kaufman. September 9th, 2020, about 15 minutes to go to the cash close with the rip your face off rally in play inside of the marketplace. But I got to tell you, it's not necessarily the rally that's on my mind. It's all right now about implied volatility. And we're going to decipher if what implied volatility is saying right now is deep cause for concern. Let's actually get to work in this evening's video. Take a quick glance at the overall marketplace, obviously then jumping into volatility. But yeah, the players in the marketplace, specifically today, it's all about the index products. It's all about the futures contracts. And that is simply because we are seeing extraordinarily high degrees of correlation. And one thing I will often mention is, and talk about pretty much incessantly on these videos, is this correlation coefficient. And what this kind of amounts to is, listen, once you start seeing 90 products on one side of the spectrum, okay, it doesn't matter about individual stocks. It's all about, okay, the futures, because the futures then are going to drive order flow subsequently to the S&P 100. It's not necessarily about individual sectors, okay? It's all about the market as a whole. And one of the things and one of the hallmarks, okay, of sell-side activity and one of the hallmarks, if you will, of volatility is seeing not just a bounce, but a bounce, okay, on incredibly high degrees of correlation. You're seeing just that. Now, coming into later in today's trading session, yeah, a little bit of a fade. Again, is that cause for concern? Well, I think that the volatility speaks volumes here, not necessarily just, the marketplace is up, the marketplace is down. Okay, we're going to go a little bit deeper into that this evening. All right, so when I mention volatility kind of being some cause for concern, what am I referencing? Let's start with the VIX, the S&P 500 Volatility Index. So the VIX, just the last couple of trading sessions, obviously we have seen some pretty drastic sell-side activity take place in the previous, 3 trading sessions. Obviously, here we are, middle of the week, Wednesday. This is only a 4-day trading week. We're going to get some more jobs data out tomorrow morning, okay, along with a couple of other economic indicators. Nevertheless, take a look at volatility in the last couple of days. The onset of the sell side activity, volatility explodes. We have volatility contract ever so slightly. Okay, volatility early this week actually contracts more. Now, the point that I want to make over here, right there, this particular candle right here, we actually contracted to volatility lows, except at the exact same time, the market was effectively making its lows. So what I'm referencing in this particular context is, if you take a look, and yeah, in this case, you know what, we'll cruise back over to the spiders. So if we take a quick glance at the spiders yesterday, well, pretty much closed, at or near their lows of the trading session, right? So we're at or near lows of the trading session of the spiders yesterday, but the exact same time, volatility did the exact same thing, okay? What gives inside of the marketplace? Today. Today, the marketplace, it's a rip your face off rally, and you would expect volatility to contract, okay? But yesterday, we're near the lows of the trading session, and volatility is contracting. So one of two things that you can think as a trader. As a trader, you can come in here and say, well, the marketplace was anticipating the rip your face off rally. Or it had everything to do, okay, with the type of options that have been trading. And, okay, what we're going to show you here is, I think, incredibly interesting. And it's not often you get to say this in your trading career, but there are things going on right now no one has seen in the marketplace before, and you should be a little bit perplexed. Again, volatility down with the marketplace tanking. I mean, the Nasdaq off 500, 600 points yesterday, and volatility actually decreasing on that. It's a big question mark, but I'm going to go much deeper. And this is why I believe that this is some cause for concern. Let's actually jump over to Microsoft. Okay, Microsoft gets absolutely whacked back in 3 days of trading. If you actually look at the year-to-date percentage, Microsoft is up 44%. At the depths yesterday, was only up 26%, is in full-blown, okay, Corrective territory, almost full-blown bear market territory inside of 3 trading sessions. Now, here's why I say there might be some cause for concern. If you cruise over to studies, go add study, go down to volatility study, pull up implied volatility. Now, this is just implied volatility. Remember, implied volatility has everything to do with options. It's the implication of risk moving forward. So when you think of implied volatility, okay, if implied volatility is going down, what that should typically indicate is a contraction of price action in the underlying. Except you had volatility, and I want to show you this again. You have volatility going down. You're like, okay, yeah, today it should be going down. Yeah, but it leveled off and started actually going down in the previous trading sessions, even though Microsoft was actually falling into corrective territory. Yeah, there's a lot more questions than answers on that one. It's not just Microsoft. Okay, let's move on. How did Apple fare? Okay, Apple, the exact same animal. We're actually seeing volatility contracting. Wait, this is where it gets really interesting. Facebook? Facebook's volatility actually came in quite a bit. Now I'm actually going to take it a step further. Now we're actually going to look at IV ranking. This is implied volatility ranking, which looks very, very similar to the implied volatility chart. Take a look at Facebook. Facebook is getting crushed back. Again, on a year-to-date percentage. Let me just snap to a year-to-date percentage here. Facebook, which is up 44%, was then appropriately up about 28%. Again, corrective territory with volatility falling the entire time. This actually starts to go into a little bit about what many have been talking about. It's like the talk of the trading community right now. It's all about the gamma squeeze. There are so many people that have been buying call options and buying call options. Yeah, well, the way that volatility goes down with the marketplace going down, number one, they're not buying call options. Number two, they're very likely doing what? Selling those call options. There seems to be a glut, okay, of supply side activity in the options market. I mean, in terms of the option marketplace, if you actually open up the option statistics, Facebook is getting it done here, people. Look at this. 343,000 options are trading today. When you start looking at the calls, you're like, woohoo, look at all the calls that traded. But be careful with your logic here, because when you start to look at the sizzle index, the sizzle index actually says that the number of options that are trading isn't even the norm. The sizzle index is today's option volume versus the previous 5 days options volume. We're only doing about 90%. Okay, the calls are even lighter. What you actually have over here is, again, how does implied volatility go down? Supply and demand, right? And if volatility is going down, what that is indicating is there is supply side. Again, there are people offering those calls for sale. Now, continuing on down the list, the usual suspects. Implied volatility getting crushed inside of Amazon. Now, again, I know what everybody's thinking over here because everybody's heard the story. And the story kind of goes like this. Well, okay, there was this gigantic whale called SoftBank. And SoftBank was going out and they were buying up tons of Amazon and tons of all of the monsters of tech. By the way, the monsters of tech, what I call Microsoft and Apple and Facebook and Amazon and Google. Oh my. So SoftBank is going out and they're buying up tons of stock and they're buying tons of calls. And they did it $4 billion worth. First and foremost, okay, don't listen to the media hype. $4 billion in this marketplace isn't anything. It's not even a drop in the bucket. $4 billion? You kidding me? It doesn't matter whether it's call options or not. $4 billion, okay, wouldn't even make a dent, okay, inside of the S&P 500. Doesn't make a dent. And that's one of the points I want to make. There's a lot of hype, but in the end, people, this is indicative. What you're seeing in terms of all this volatility action in here, this is indicative of retail clients, okay? Retail clients are really driving markets, and what you have to think about right now with volatility kind of falling, you know, and I'm kind of asking that question a moment ago, like, you know, is this volatility a cause for concern? To me, I don't think it's a cause for concern. Quite the contrary. I think it's a wonderful opportunity because right now, with the marketplace falling, okay, you have volatility dropping, which means, again, I want to be, all right, buying that premium. I want to be buying gamma right now. Using gamma iron condors, I want to buy gamma, and I want to buy gamma with both hands because, again, price action in the marketplace is picking up. Price action is huge in the last 4 trading sessions, just huge. And volatility is falling. That means I'm actually okay, capable of buying options, all right, at, if you would, a discount relative to the price action in these underlyings as of late. Now, back over, and I'll leave you with this one last thought here, okay? Because again, everybody's, it's a rip your face off rally, and we get infatuated with direction and directional bias in the marketplace. But that's not what this marketplace is about right now. This marketplace is, what? The gift horse is staring you, down right now. And you got to look at this as an opportunity. So let's deviate back over to our discussion on SoftBank. And for that discussion, we're actually going to look at the S&P futures, which is a $3,400 product. Now, in the last couple of minutes of trade today, the volume is really starting to pick up inside of the S&Ps, and you're looking at a one-day, one-minute chart, and it's, well, take a look at this. It's getting real out there, folks. So you're looking at this, and you're like, well, that's a big minute. How many contracts went through that minute? Over 20,000. 20,000 contracts in a minute. But let's say that a heavy minute is 10,000 contracts, okay? Now remember, we were just talking about a moment ago because it's splattered all over major media that somebody went out and traded $4 billion worth of, call options, and they ran the roost to the marketplace. Let me put things into perspective for you, because I cannot stand, okay, how the media is literally portraying what is an absolute, okay, fantasy world in a big nothing. S&P futures are worth, okay, $3,400. But do a little math. If you actually understand what's called notional value, take that $3,400. Each 1 point, the futures are effectively worth $50. So multiply the 3,400 times 50. So what is a futures contract really worth? $170,000. So it's $170,000. So what? Who cares, Don? Well, in this minute of trade, they're going to do over 10,000 contracts. So let's go ahead. Let's multiply $170,000 times, okay, 10,000. What do you got? It's a cool $1.7 billion. Okay, that's in 1 minute. That's just the S&P futures. Does that include the Nasdaq futures? Hell no. Does it include the Russell futures? Absolutely not. Does it include like what? Bonds? Right? Bonds have even bigger notional value in most cases. Does it include any of the products, okay, on here? No. To put it into perspective, that $4 billion, as I said, it's not even a drop in the bucket. It's an afterthought, okay? You don't want to listen to some of the hype, okay? It is. This market is absolutely about a gamma squeeze. It is. But it's retail clients, okay? And retail clients, I'm telling you, you can feel it out there, people. They're out there. They're supply side. They're bailing out, okay? The bid that's under this market today, oof, you got to be on pins and needles. You're just waiting for that sell side activity to come in here. But that's not what it's about. The opportunity right now is to be a premium buyer, because you know that markets are going to be a rocking in days to come. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.